How do you define success when it comes to trading futures? What makes a successful futures trader? As obvious as the answer may seem, some traders tend to confuse the issue by bringing up other factors that are also crucial to trading. For example, knowledge, experience, development, psychological traits. As important as these factors may be, they are secondary, at least in terms of answering the question, what are the traits of a successful trader? When it comes to measuring success in trading, there is only one win condition, that over time, your gains are larger than your losses. If you are a successful futures trader, you may have more losing trades than winning trades, yet your upside payoff is more substantial than your downside result. You may have a narrow understanding of trading tactics, yet your simple approach gets the job done. Your flexible approach and tweaking keeps you net positive, despite the changes that may have made your previous methods irrelevant. If successful performance can be linked to specific behavioral traits, there's a strong chance that these behaviors may have less to do with psychological issues. I do not want to downplay the importance of psychology, but no matter how good your characteristics as measured by the principles of trading psychology, the fact remains that if you can't think your way through a challenge, then your discipline or positive thinking will not help you. So, the following 5 traits you present are not your typical trading psychology tips. We're not going to talk about the importance of discipline, patience, mental toughness, or planning, because I know you're already reading about it in blogs, forums, and other trading books. Instead, we'll discuss the traits that may lead to potentially sound ideas. We'll explore the challenging ideas that many futures traders do not want to consider. 1. An aptitude for critical thinking and skepticism. If you want to see things with a hyper clarity, or at least understand how things appear to be hyper clear, then you might need to start with a clean slate. That is, abolish every assumption that you have about a given matter. Start from scratch, build your knowledge from the ground up. Reinvent how you see a given topic in terms of that only you can verify and accept. When it comes to trading, a highly speculative activity, a trader who thinks critically may realize that he or she is holding many assumptions about the markets, whether real or false, practical or useless, relevant or irrelevant. If you can't thoroughly question your assumption about anything market related, you won't be able to adapt to situations outside the norm. You may be operating from a static model that can easily collapse in a dynamic market environment. After all, markets are dynamic. And a dynamic environment requires not only adaptability, but also willingness to learn how new things and how to discard old things that are not pragmatically relevant to the new situation. Since trading is a highly speculative activity in an ever-changing dynamic environment, successful traders approach every perspective and approach with a healthy dose of critical thought and skepticism to remain adaptable to the changing climate and to rediscover what works and what doesn't. Number 2, good traders have a healthy respect for randomness and risk. Have you ever created a price chart using a random number generator on Excel? If you try it enough times, you may find it you might be unpleasantly surprised, because even at 50-50 chances, you could still produce clean uptrends, downtrends, head and shoulders, symmetrical triangles, and other technical analysis patterns. Over time, it produces a chart that looks like a sideways market or a trading range, but the fact that it can produce clear technical patterns should concern you a bit. What if you are trading a pattern in a live market and it works out? You may be thinking that you were right, when it's quite possible that in that particular case, the results were simply random. Don't attribute your trading success solely to skill, otherwise you may be denied the chance factor. And if you do that, you might not see it coming when things are not working out in your favor. The big risk here is that you fail to exercise vigilance over risk if you think that your trading success is 100% due to your own speculative talent. You may think, why exercise caution when my trading approach works so well? Everything works until it doesn't. Randomness doesn't always look random, and when you find success in a given trade, you might be the case that success just happened to find you out of pure chance. Respect randomness and respect risk. Remember, if there is 5% who consistently make money in the markets. The traders among the 5% today might not be among those in the 5% tomorrow, but this still may be 5%. Point number 3, knowing what not to do may be more important than know what to do. It is not how much you know that matters, but how well you know the few things that work for you. Learning is always encouraged, but unlearning what's not necessary, practical, or effective may be just as helpful, if not more so. Seeing too much data can hamper your decisions, whereas having a narrower approach with strong money management may increase your odds of success. And between the trader who possesses comprehensive knowledge of trading strategies and the simple trader who only knows a few things, the one that knows a few things may have an advantage over the one that has comprehensive knowledge. If the quality of knowledge is more important than the quantity of knowledge, then knowing what not to hold onto, and by extension not to do, may be more important than accumulation of clutter of knowledge. Online futures trading comes with the perks of information and accessibility, but that can often lead to information overload. It's all about addition by subtraction, adding the quality of your tools by subtracting what's relevant from your toolbox. Number 4, seeing the big picture. If you trade technically, you might be foolish to avoid the bigger fundamental context. If you trade fundamentally, it might help to understand the price action context in which you trade. In other words, try to see the bigger picture. We all get sideswiped by unexpected developments, but to get sideswiped by an event that can easily be anticipated or commonly observed and suspect is a bit inexcusable. You want to be a better trader, try to see the bigger picture in every market context you trade. Final point, find your Holy Grail without believing in the Holy Grail myth. There are no system of all systems. Nothing of that sort exists. Therefore, there is no Holy Grail, at least in the form that many traders seek. Yet, some successful traders will have found something that if they were to describe, it might convince other traders that what they have found is the Holy Grail of trading methodologies. So, are misguided traders looking for something that doesn't exist? Or are they looking for something that may exist, but not even in the form that they seek? Warren Buffett seemed to have found something. Ray Dalio seemed to have found something as well. Jim Rogers and George Soros seem to have found something that works for them. And that's just to name a few of the bigger and more famous traders and investors. What have they found? We often tend to miss the fact that what makes a trader is not the set of internal characteristics and internal means that he or she employs in the course of trading. It's the way both resonate with the trader's natural inclination. It's not the trading system, but rather how or if the system at all requires resonate with you as a trader. Not everyone will have a knack for day trading. Some might be better off swing trading instead. Not everyone will make a good technical counter-trend trader, but he may find an inclination to be driven fundamentally or be based on the contrarian indicators. Not everyone will make a good momentum trader, yet some discover that they have a knack for spread trading or statistical arbitrage. The point is that the Holy Grail doesn't exist in general form, but on a personal level, if you find something that works for you, your natural tendencies, inclination, risk tolerance, and more, and if it works for you, then it just might be your own personal Holy Grail. What works for you might not work forever, which means you will have to constantly adapt in order to find it again. What works for you might not work for somebody else. What worked for somebody else might not work for you. Focus on what works for you in terms of your total means and capacity. Don't follow others. Eventually, you will have to carve your own path. And once you will find something that works for you on a very practical and realistic level, maybe, just maybe, you'll find success in trading. I hope you can click the like button, comment, or just give us a call if you want to trade futures with Optimus Futures or SpotFX. Until next time, it's Matt Z from the Optimus Studios.